Registered investment advisor Viridi Funds is launching an ETF focused on clean energy crypto miners. The fund will invest 80% of its capital in crypto miners and 20% in semiconductor companies that take advantage of cleaner energy sources. And joining us now to discuss is Viridi Funds CEO Wes Fulford. Welcome to the show, Wes. So tell me a bit about Viridi Cleaner Energy Crypto Mining and Semiconductor ETF, its composition and how it works.
Yeah, so the ETF, it's in its third trading session now. We debuted this week under the ticker RIGS on the NYSE. It's a actively managed fund focused on investing in the infrastructure that underpins this network. For those of you or your listener base, you probably understand that the cryptocurrency miners themselves are providing that essential service, which is that transaction validation and verification of trades across the world. So this is a leveraged play on the underlying commodity, offering exposure to the operators that are, if they're good, running efficient equipment at industrial scale power at reasonable costs, they're able to produce BTC at a significant discount to spot.
It's funny, this is a great segue from our previous segment where Michelle Schneider said ESG concerns, clean mining, clean energy is going to be a hot topic in the crypto world and the financial space. So from your perspective, was there a demand for a financial investment vehicle like this?
Yeah, as a former CEO of a public listed miner on the NASDAQ, there's increasing pressures from shareholders, from the media, on boards and management teams just to be more transparent about their sources of energy and being good corporate citizens in terms of greenhouse gas emissions. And our intent is to sort of further that narrative, to do what we can. And there's been the evolution of a number of associations that have popped up recently: the Crypto Climate Accord, the Bitcoin Mining Council, all pushing this agenda. And we're first to bring a product to the markets with this narrative, with this thesis, through Vridi and RIGS.
Okay, and yet there are also semiconductors. What's the relation?
Yeah, so as one of the first publicly listed companies, like former CEO of one of the first publicly listed companies in North America, the sector's evolving. It's still in early innings here. And then governed by some of the SEC regulations about diversification within an ETF, we've wanted to sort of step down the supply chain, looking at the semiconductors, owning the semiconductor companies, the manufacturers of this mining equipment, just given the universe of potential or pure play publicly listed cryptocurrency mining operations is relatively small. As the sector evolved with some of the conclusion or completion of some of the announced transactions in the public markets, will continue to increase our weighting to pure play cryptocurrency miners powered by renewable and sustainable backed operations.
You mentioned public companies. Where geographically are most of these companies located?
Primarily in North America, Canada and the US, which tend to be the sort of beneficiaries of the hash rate growth in recent months and certainly the past 12 months.
And I understand it's available for trading on the New York Stock Exchange's ARCA platform. Anywhere else? Is it available now?
It is now, yeah. Third trading session we debuted on Tuesday. So super excited to complete this process, and we'll continue to innovate new products within this ecosystem as we go.
And on the conversation of ESG, does Bitcoin have an energy problem? What needs to happen in the space to convince institutional investors otherwise?
Look, it's as somebody that's been on the forefront of this narrative for the past 5 years, previously as an operator and now running a financial product in the sector. I do think it's a bit of a tired narrative. I mean, there's been some reports recently, one published by the Bitcoin Mining Council, saying that 50% plus of North American-based miners are powered by renewable. I built a mining operation in Canada in the province of Quebec, which was powered by and is powered by virtually 100% renewable-based energy, hydropower. The benefit of scaling crypto mining operations is you can locate a data center right next to a stranded source of energy. The infrastructure sitting up in northern Canada on a river somewhere where the actual owner of the electrical distribution code doesn't have to incur the major transmission costs tied to moving that to another jurisdiction, and losses moving that to another jurisdiction. So beneficial sort of component of building and scaling an operation.